MKR surged by 58 in just 4 days and compound double in value within a week. What is driving the market frenzy around RWA? Are there any other opportunities waiting to be discovered? Stick around as we are about to reveal all the answers. Hey everybody, this is your girl Tommy. Welcome back to my channel. Let's face it, the recent market conditions have been quite frustrating. Constant ups and downs, sudden rallies, and snap drops have become the new normal. The lack of sufficient funds in the market has prevented a smooth one-direction trend. But perhaps there is another way to look at it. Maybe the market is still waiting for a consensus, a new fresh narrative to emerge. That's where the RWA concept comes into play. Real-world assets. Now you might be wondering, what is so special about this narrative when we always have new ones? Well, let me explain. Previous narratives mostly focused on reforms and innovations at the foundational and application levels. They stimulate internal funds by within limited scope. However, RWA is different. It seamlessly connects the traditional and crypto markets, unleashing unlimited possibilities. We have discussed before how individual stocks in the US stock market surpass the total market value of the entire crypto market. So compared to that, our previous endeavor seems to be a child's play. This is why the RWA narrative stands out. It is unique and it's significant. RWA represents a collision between the traditional bond market and DeFi, while Bitcoin is linked to traditional finance through ETFs. Tokenizing traditional assets requires specialized projects to make it work, and that's where RWA steps in. Before we dive deep into it, make sure to slap the like button and subscribe to my channel. I'd really appreciate your support. Why does RWA suddenly gain so much momentum? First, let's talk about what RWA actually is. RWA stands for real-world assets, which are physical assets tokenized and enter into blockchain. These assets can take various forms such as real estate, stocks, bonds, commodities, artwork, and so on. A wide range of tangible assets represented in the tokenized form on the blockchain. The RWA concept is not entirely new in the blockchain industry. The most successful RWAs to date are USDT and USDC, which map the value of the US dollar onto the blockchain and tokenize it. We can observe how stablecoins are quietly influencing the entire crypto industry. They have become an essential component, and as seen in the case of USDC's scandalous downfall, their significance cannot be underestimated. So why has RWA suddenly taken in the spotlight? Well, in my opinion, there are two main reasons. The first reason is the upward trend in the US bond yields and the sluggish DeFi market, which has directed the crypto industry attention towards RWA. With the Federal Reserve's continued interest rate hikes, the rising yields of US bonds, considered the risk-free investments, have attracted capital inflow into traditional markets. As a result, funds in the crypto market have started eyeing the lucrative opportunity. After all, who wouldn't find US bonds appealing? They offer both security and high return. From the data, we can see that the total value locked in DeFi has been a downward trend since 2022, like a roller coaster going downhill. The TVL has plummeted by over 74% from its peak of nearly 118 billion in December 2021, reaching 45.5 billion as of July 1st. A freaking 134.5 billion has been drained from DeFi. As market uncertainty increases, DeFi investors are seeking ways to diversify their investments and secure stable returns beyond the realm of cryptocurrencies. This is where RWA real-world assets come into play, presenting a fresh opportunity and a new direction for DeFi investors. By leveraging blockchain technology, DeFi enthusiasts can now easily explore the traditional off-chain DAI market, participate in global financial markets, and chase after high-yield investments. On the other hand, traditional financial institutions have recognized the commercial value and potential of RWA tokenization and are beginning to enter this field. Traditional financial institutions hold significant amount of real-world assets, such as real estate, stocks, bonds, and more. Tokenizing these assets brings greater liquidity and value, thereby increasing institutional earnings and competitiveness. Additionally, RWA tokenization provides institutions with more opportunities for investment and financing, expanding their business scope and market share. In traditional financial markets, asset ownership and transactions often require certification and regulation by intermediaries, which can be time-consuming and costly. However, the use of RWA can bring tangible benefits to business by reducing the need for intermediaries, automating processes, and increasing liquidity. Now let's talk about the advantages of asset tokenization. First, market expansion and increased investor attraction. Tokenizing real-world assets opens up new funding opportunities for business, creating a fresh avenue for capital infusion from the DeFi ecosystem. At the same time, the DeFi ecosystem benefits from investment returns, access to diverse off-chain markets, and the opportunity to expand its traditional financial customer base. Second, enhanced capital efficiency. Unlike traditional financial markets with time limitations, the crypto market operates 24/7. Tokenization significantly increases the liquidity and activity of traditional assets. Additionally, assets tokenization allows liquid assets to be transformed into fractionalized investment portfolios. In the realm of securities, tokenization serves as a useful tool for securitization or refinancing assets into more liquid and secure instruments. Bringing real-world assets onto blockchain and integrating them into the DeFi ecosystem provides unique collateral or investment opportunities, market efficiency, and liquidity that traditional markets cannot offer. And improved capital efficiency further drives the development of RWA, creating a positive feedback loop. Thirdly, lower entry barriers for users. Tokenization enables retail investors to access asset categories typically restricted to high net worth individuals or institutional investors. Particularly in the realm of physical assets, retail investors can participate in cross-regional products or invest in high-value assets. These opportunities were traditionally inaccessible to the average user due to high entry barriers in traditional finance. Although these assets may have low liquidity in small markets, once they are tokenized and brought onto the blockchain, they become accessible to all participants, significantly lowering the entire threshold. Furthermore, issuers benefit from reaching a broader investor base and creating new asset categories. Retail investors now have the access to markets they couldn't enter before. First, increased transparency and security in transactions. Traditional financial transactions are susceptible to issues such as opacity and manipulation. However, when everything is digitalized on the blockchain technology ensures transparency in on-chain payments and data flow, immutability of transaction records, traceability, higher efficiency, lower operating costs, increased composability, and a fair market environment. Now, let's dive into RWA industry classification and some examples. Let's talk about MakerDAO. In 2020, MakerDAO officially prioritized RWA and released guidelines and plans for this integration. In addition to issuing the stablecoin DAI, MakerDAO expanded its collateral types beyond ETH to include tokenized real estate, invoices, and accounts receivable. The main sources of revenue for the Maker protocol and the interest from DAI lending and liquidation penalties. MakerDAO generated $3.8 million in profits from its holding of RWA, making a significant contribution of 11.6% to its overall revenue. Investments in real-world assets significantly increased MakerDAO's profitability, accounting for 58% of its income. Token protocol. Carbon credits refer to the certification of the reduction or offsetting of carbon dioxide emissions by enterprises through verification under the Verified Carbon Standard. Token protocol is a protocol deployed on Polygon that aims to tokenize carbon credits and facilitate to promote carbon neutrality through financial means. The carbon credits traded on Token protocol come from registered carbon offsets on Verra, a non-profit organization that registers carbon credits. Current status: Token protocol was launched in October 2021 and currently supports Polygon and Celo. The protocol has tokenized around 22 million tons of carbon credits through the Carbon Bridge, offsetting 298,000 TCO2e. The carbon supply amount is about 19 million pledged in the BCT and NCT pools, and the total liquidity is about 2 million across various exchanges for BCT and NCT. Realty is a platform for tokenizing real estate founded in 2019. It primarily serves real estate projects in states such as Detroit, Cleveland, Chicago, Toledo, and Florida in the United States. Investors can purchase RWA tokens to invest in real estate. Till today, the platform has processed over 52 million and tokenized 870 properties. This protocol does not have a native ecosystem, token and utilize DAI for value exchange within the ecosystem. Real tokens are issued for each real estate asset as collateral for rental revenue sharing. Swarm claimed to be the first tradable stocks and bonds on DeFi. Swarm, it was launched in October 2021 with the aim of becoming the core of transparent financial culture and creates value for the world. In February 2023, Swarm became the first organization to offer digital US Treasury bonds and Apple stocks through regulated decentralized platform. These tokens are 100% backed by real stocks and bond ETFs, purchased in traditional financial markets. The underlying assets are held by institutional custodians. The token can be redeemed for the value of underlying assets at any time, and monthly disclosure of these reserve assets will be made public. Well, in conclusion, if US Treasury bonds could be tokenized, it will represent two significant acknowledgments. Firstly, it shows that the Federal Reserve is open to making US bonds more easily and accessible to global audience, allowing people worldwide to invest in them more easily. Secondly, it signifies the validation of stablecoins as a reliable backing for digital assets. The potential tokenization of real-world assets will be a remarkable development, surpassing the significance of a Bitcoin spot ETF. However, it is important to recognize that while the idea of RWA is grand, its implementation will be extremely challenging. Overcoming regulatory, legal, and technical obstacles will require considerable effort and collaboration. Now let's get back to the tokenization of US Treasury bonds. What do you think? Do you think it is feasible? And how do you feel about that? Feel free to share your thoughts in the comments section. Also, please remember to subscribe and like the video if you enjoy it. I'd really appreciate it. Okay, that's it for today. I will see you guys in my next video.